Thanks for joining David, Kevin, and myself for the market update for the month of September. September was another excellent month, so we're all happy about that. The S&P 500 was up 3.5%. The S&P TSX 60 was up 4.9%, and the MSCI was up 4.3%. September usually is a little bit of an iffy month. This is the best September we've had in the last 15 years. September since 1945 has actually brought in a negative number on average, minus 0.6. So again, thrilled that we had an excellent September. I'm going to pass you over to the guys. They're going to dig a little deeper into, what moved the markets positively in the month of September and what happened. But as always, if you have any questions, if you want to review anything, please don't hesitate to give any of us a call here. Take care. All the best to you and the family.
The month of September saw rate easing by both Canada and the US. The Bank of Canada lowered its policy rate by 25 basis points, bringing it to 2.5%. Now, they cited slower economic growth and making some progress on inflation as the reasons for that cut. And the markets are pricing in further easing towards the end of the year. So we'll really take note as the Bank of Canada has its next meeting to see how that plays out for our rates. Down in the US, the US Federal Reserve lowered its target range from down to 4 to 4.25%, so a 25 basis point cut. And they noted that they're really starting to see a softening labor market, and that was a big reason for that cut, even though inflation has remained sticky for them and is still remaining elevated, a little bit higher than they would like it to see.
So the takeaway here for investors in the month of September is that obviously the rate cuts have been responded to positively by stock markets, with the stock markets performing quite well in September, especially in wake of the rate cuts mid-month. And those rate cuts are based on some softening economic data, as Kevin mentioned. We've got manufacturing levels in Canada and the United States sub 50 on the PMI index. So that just indicates that manufacturing, especially in certain sectors that may be more heavily hit by the tariffs, like autos and steel here in Canada, continue to be a little bit weak. And so because of that, we're probably going to continue to get some interest rate cuts in Canada, but also in the United States too. Donald Trump obviously has been pushing for rate cuts for quite some time. The Fed has been resistant up until now to cut those rates. But the good news for investors is that there's certainly a longer runway of interest rate cut potential in the United States. And when interest rates go down, that's generally supportive of asset prices like the stock market, real estate continuing to do well, as long as the labor market doesn't fall off a cliff. And so the tariff war has certainly subsided. It's the temperature's been brought down there, and the economies in North America continue to do okay despite some tariffs on certain sectors. So that's positive for the stock markets going forward. And as long as we continue to see some moderate interest rate declines later this year and into next year, the stock market should continue to do decently well.
As always, though, if you have any questions about the markets or your portfolio or want to talk to us about updating a financial plan, please feel free to give Harry, David, or myself a call anytime.
Take care.